Saturday, May 16th, 2020, Maneco 64, home of alternative economics and contrarian views. The title of the video today is Fiat Money Creation is Going Off the Charts. I'm going to look at some data, the Fed's balance sheet, M2 money supply. Yes, the balance sheet is growing even more exponentially, but so is M2 money supply. I'm also going to reference quickly an article or editorial from the FT that's come out this morning. And towards the end, I'm going to reference one of my all-time favorite books about money and history, Fiat Money Inflation in France, How It Came, What It Brought, and How It Ended by Andrew Dixon White. And I truly believe we are also experiencing our fiat money inflation in France moment. And it's not just in France this time, it's worldwide. So here's the book. You can get a free PDF online. You could read it in one day or over the weekend. If you haven't read this book yet, it's a must read, especially with what's going on today, not only in the economic and financial world, but in the political world, I would say. So before we look at the Fed's balance sheet and M2 money supply, let's look at this opinion piece that came out today in the FT. It's from The Long View by Michael McKenzie. It says, why prudent investors should start paying up for inflation protection. The question is whether central banks can persuade markets they are truly independent. And I'm not going to go through the whole article. I just wanted to take you to this part where he says, holders of gold, a classic inflation hedge that has risen by about 1/3 over the past year, certainly sense their moment has come when they look at central banks upping their holdings of government and corporate bonds, with the Federal Reserve's balance sheet set to rise beyond 10 trillion this year. Some argue this could become a permanent feature of monetary policy, tipping the financial system towards outright debt monetization. That's what happened in Germany in 1923. Weimar Germany, the Reichsbank was monetizing debt. The banks weren't really independent anymore. This week, I heard an interview that the FT did with Andrew Bailey, the governor of the Bank of England. And the reporter asked him about the debt monetization. And he said that there's no fiscal dominance, basically saying that the government is not forcing the Bank of England to monetize debt, even though he doesn't call it that. I beg to differ. The Bank of England is not acting independently, in my opinion. If Andrew Bailey decided not to do the QE that he's doing, the extra 200 billion since he took over in the middle of March, I think he'd be in a lot of trouble. We could see him be sacked by the Chancellor. It is the Chancellor of the Exchequer who nominates the Bank of England governor at the end of the day. So I just wanted to put that through to you. It's not just alternative media, economics person like me that's talking about the Fed's balance sheet going over 10 trillion. It's the FT as well. So now to the numbers. The Fed's asset purchases, or QE, and M2 money supply. And before I start, let's look at what M2 money supply is. So Investopedia says M2 is a calculation of the money supply that includes all elements of M1 as well as near money. M1 includes cash and checking deposits, while near money refers to savings deposits, money market securities and mutual funds, and other time deposits. These assets are less liquid than M1 and not as suitable as exchange mediums, but they can be quickly converted into cash or checking deposits. So that's M2. So I'm going to start out with the Fed's balance sheet, which they updated this last Thursday. So percentage change in Fed's balance sheets. So I've done a little exercise here that I also did with M2. Let's start with the balance sheet. So it was at $4.158 trillion on February 26, 2020. As of May 13th, it's now at 6.934 trillion, almost 7 trillion. That took 78 days. That was an increase of 66.74% in those 78 days, or 313% per annum or annualized. So keep that in mind. So there's the increase in the balance sheet there from the 26th of Feb. Percentage change in M2 money supply. So the St. Louis Fed, they publish these numbers in billions, not in millions like the Fed's balance sheet. But anyway, it doesn't matter. So as of February 26, 2020, M2 money supply, which we know now what it is, was at 15.508 trillion. As of May 4th, which is the latest publication that the Fed did for that statistic, it was at 17.764 trillion. The increase was 14.55%, as you can see, over 71 days, or 75% per annum or annualized. Let's keep going. So for every $1 the Fed creates out of thin air, the M2 money supply is increasing by 24 cents. At current rates, the following would happen in a year's time, as you can see. By February 26, 2021, the Fed's assets or balance sheet would equal 17.175 trillion. We saw the FT saying that they expect, or investors expected, above 10 trillion. Is it definite that this will happen? Not really. I'm just looking at the rate of change that we've seen in the last 78 days. It could go lower. The rate of change could decrease, or it could even increase. You never know. So the M2 money supply by February 24th, 2020 would equal 27.139 trillion. So those are the numbers. That's how it's looking right now. So just wanted to show you a chart of the Fed's balance sheet, the longest that the St. Louis Fed provides for, all the way back to the early 2000s. And you can see where we are now. So yeah, the Fed's assets would literally go off this chart. They'll have to readjust this chart, of course. And the same thing goes for the M2 money supply. And that is why I said fiat money creation is going off the charts. And the law of supply and demand is very important. And it's not a very difficult law of economics to understand. The more of something you create or produce, in this case, funny money that the central banks create out of thin air, the more you create of that particular thing or good or whatever, if other goods and services within the economy don't keep up with the rate of growth of money, that money is going to become worth less. Those goods and services are going to be more attractive. And that's why precious metals are going to do well in these next months and years, because the central banks are going to keep creating this paper money, fiat money, or credit. And gold and silver, of course, have been monetary commodities for thousands of years. and they've held their value relatively well, very well over the last few thousand years. There's the old story about Roman times that you could get a bespoke toga and a nice pair of sandals for about an ounce of gold. And it's pretty much still the same with an ounce of gold. You can get a pretty nice bespoke suit. Maybe not a Savile Row one, but you can get a bespoke suit and a nice pair of brogues or a pair of shoes. You might even need more than an ounce right now, and that's why the gold and silver are still undervalued, in my opinion. So to finish off, let's go to the Fiat Money Inflation in France book. I said that what's going on economically and financially is very similar to what happened in France during the revolution around 1790 to 1796. I think our fiat money experiment, similar to what France did, started in 08 with the massive QE, zero interest rates, negative interest rates, and it's accelerating now. In France, of course, it took about 6 years for the system to collapse. We've been at it, I guess, since 08. And one could argue, of course, that this process actually started earlier, maybe in 1971, when Nixon took the dollar off gold. But I think the real acceleration started in 08, and it's getting worse now. So what happened in 1790? I'll just read here a summary in the back of the book. It says, in 1790, the French people, by general acquiescence, embarked upon what they believed to be a harmless experiment in currency inflation. The results of this action are vividly described in Dr. Andrew Dixon White's book entitled Fiat Money Inflation: How It Came, What It Brought, and How It Ended. So basically, after the revolution, France had huge debts. The economy was in a depression. Sounds familiar. And the General Assembly decided to start issuing assignats, which were actually backed by church land and properties. So they actually thought, oh, if we back it by something, it should be okay. And they were very reluctant, I have to say, in the beginning, but eventually they succumbed. The General Assembly, they passed the law. They started issuing assignats, and they said, oh, this is going to be just temporary. It's a one-off. And when the economy picks up, we can retire all this paper money and we can go back to normal. It sounds familiar, doesn't it? QE1, QE2. Oh, we're going to normalize things. We're going to do QT, and you can never get out. It's one of the reasons why over the years I've been saying it won't work, the normalization. It's because I read this book and I saw that it doesn't work historically. So that's what happened in France. Eventually, the whole thing imploded. But in the meantime, from 1790 to the collapse, we saw a lot of symptoms that I'm starting to see now. And one of them is the lockdown, which prohibits people to live their lives normally, keeps them in their house, keeps them away from friends and other members of the family, extended family. It keeps them away from doing social things. And it's amazing because it happened in France. It wasn't called a lockdown. I don't think the French state had the wherewithal to do what the modern state does now, surveilling people and making sure they stay in their homes. But they had something else. It was called the maximum. So let's read a little bit about the maximum, and it sounds really familiar. So this is on page 41 of my book. It might be on another page on a PDF. It says the first result of the maximum was that every means was taken to evade the fixed price imposed. and the farmers brought as little produce as they could. This increased the scarcity, and the people of the large cities were put on an allowance. Tickets were issued authorizing the bearer to obtain at the official prices a certain amount of bread or sugar or soap or wood or coal to cover immediate necessities. Does it sound familiar? When you go to the supermarket now, maybe it's changed a little bit, but a month ago or so, you could only buy 2 toilet rolls or 2 of a certain item. But it was found that the maximum, with its divinely revealed 4 rules, could not be made to work well, even by the shrewdest devices. In the greater part of France, it could not be enforced. As to merchandise of foreign origin or merchandise into which any foreign product entered, the war had raised it far above the price allowed under the first rule, namely the price of 1790, with an addition of 1/3. Shopkeepers therefore could not sell such goods without ruin. The result was that very many went out of business, and the remainder forced buyers to pay enormous charges under the very natural excuse that the seller risked his life in trading at all. So another example here, shopkeepers went out of business, just like small businesses are going out of business now. That this excuse was valid is easily seen by the daily lists of those condemned to the guillotine, in which not infrequently figure the names of men charged with violating the maximum laws. Well, we're not seeing people guillotined now, but we are seeing people arrested for breaking the rules of lockdown everywhere around the world. Manufacturers were very generally crippled and frequently destroyed, and agriculture was fearfully depressed. Wow. Lockdown, shutdown of the economy sounds familiar. To detect goods concealed by farmers and shopkeepers, a spy system, contact tracers, was established with a reward to the informer of 1/3 of the value of the goods discovered. Well, we're seeing people advertise now jobs to be contact tracers. Seems very familiar to me. To spread terror, the Criminal Tribunal of Strasbourg was ordered to destroy the dwelling of anyone found guilty of selling goods above the price set by law. The farmer often found that he could not raise his products at anything like the price required by the new law, and when he tried to hold back his crops or cattle, alleging that he could not afford to sell them at the price fixed by law, they were frequently taken from him by force, and he was fortunate if paid even in the depreciated fiat money. Fortunate indeed if he finally escaped with his life. So yeah, you hear a lot in the mainstream media about people who are selling whatever they're selling for higher prices, and they're criticized at being pirates or being like unethical, but they don't understand how the laws of economics works. The same thing could happen to landlords as well. The government could very easily come out and say you can't charge more than so much rent, and a lot of landlords are going to say, well, it doesn't pay for me to rent my property at that rate, so I'm going to stop renting. And you get like a shrinkage in the supply of rental properties, and it's not out of the realms of possibility that the government could actually confiscate those properties. I'm not saying they will, but it's possible. I think we are in the final stages, and what we're experiencing now all over the world with lockdowns, shutdowns, social distancing, the talk of people spying on each other, snitching. Even government officials are saying that it's okay to snitch. Contact tracing. That reminds me so much of what was happening towards the end of this experiment in France over 200 years ago. So what do we do in this situation? Well, we keep our heads down. We try to inform the public as much as we can in a way that, doesn't cut off our message. Do it in a roundabout way, not so directly, I would say. And if you do have a savings in paper money, in your national fiat currencies, I'm not recommending anything, but I think it's very dangerous in terms of protecting the purchasing power of those savings. So how do you protect yourself? Well, with precious metals. And if you want to find out more about how to acquire precious metals, tune in to my live stream tomorrow, Sunday at 9 p.m. London time or 4 p.m. Eastern time in the US. I will take any questions people have about acquiring precious metals. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to this channel if you haven't yet. And you can also follow me on Twitter, Facebook, and all these other platforms below here. I wish you all a great weekend. Take care. Bye.